Yeah, well, thank you and good morning. So we've had a great start to the year. The top line is up 9% on an underlying basis. It's actually our highest quarterly print of income for about 7 years. Underlying profit up about 5%, and our capital and our returns also very, very solid. So we've seen a lot of market volatility, obviously, over the last several weeks. I think we have captured a very good share of that. And notwithstanding many of the uncertainties that are out there, we've been really pleased with the start to this year, and hence why we've slightly upgraded our full year outlook.
Yeah, I've been very interested in your focus in various emerging markets where you're just ditching the ones where you're subscale and really doubling down on the ones where you think the growth is going to be. Can I ask you to comment, though, on what we're seeing on the broader foreign exchange markets as well? Because this massive flight to the dollar isn't just about the carry trade. It's a large part of the carry trade, but it's also about the tensions of interest rates, inflation across Asia, across the globe as well. I just wondered if you could give us some of your educated thoughts on what we're seeing there.
Well, we clearly are operating in quite unprecedented times, and particularly on interest rates. The change in sort of sentiment on interest rates has been sort of changing in front of our eyes, and generally that has been of an upward direction in the very near term. For the last couple of years during COVID, it's clearly been a difficult period for many banks with very, very low interest rates, but it does seem like we've got a period ahead when we're going back to pre-COVID levels. I think many businesses out there saying, look, it's all very unpredictable, therefore a lot of them wanting to actually hedge or fix the rate risk and hence the sort of currency risk that goes with it. That's a large part of what our corporate business does, working with our clients to deliver on that, and hence why we have been very, very active in supporting them. But overall, the fact that the rates environment is looking like, sort of 3% is not too far away, when for the majority of the last 2 years we've been close to 0%. That is both for our clients and for us. That has got opportunity sitting in it, but also we need to be mindful that economic growth and so on, there are clearly questions about how much it will dampen that. At the moment, we're not seeing it, but obviously we need to be very mindful of that.
Andy, it's Karen jumping in. There's a lot in the results that reminds me of what we've seen from the other banks that have been reporting this quarter, from the rate tightening environment to what we're seeing in terms of client behaviour. I just want to move on to the wealth management numbers, down 17%, the largest market, Hong Kong, down 26%. Can you just talk about some of that client activity and the sentiment you're witnessing at this point?
Yeah, it's a good point. So what we have seen is great strength on the corporate side with the rates, as I've just referred to, but some offset from that in the wealth management space. So about a third of our income in wealth management we make in Hong Kong. And during the first quarter, we had sort of two effects. One was COVID, which obviously peaked during that period, and there were many restrictions on people being able to leave their homes and upon our relationship managers being able to meet clients. And secondly, with the markets being very turbulent, people do tend, I think, just to sit on the sidelines a bit to see where the market will settle. So we did have a first quarter that was tougher in Hong Kong, particularly a little bit in some of the Northern Asia markets as well, and hence the numbers were slightly down a year ago, albeit they were actually closer to the levels we've had in the last 2 or 3 quarters. So hopefully now the restrictions in Hong Kong are lifting. We'll start over a period of time, not immediately, but start to see the momentum coming back in the wealth management space. But clearly that has been more depressed in the first quarter, you're right.